Are you adding to your equity exposure, as many investors appear to be doing this week, in the hopes that we'll get a stimulus deal no matter what?
No, we are not. I would say we're pretty neutral right now. We're not underweight. We're not overweight. We're sticking where we are, although we are getting slightly, which sounds maybe a little bit contrarian, more conservative in our approach. We have pretty heavy options book, but we're looking to convert some of that into convertibles and doing a couple other defensive tactics around the portfolio.
What have your returns generally been like, and how much exposure do you have to stocks at this point?
So our asset allocation is a little bit different than everybody else's. We don't really separate things into equities and fixed income. We separate things by the primary risk drivers. So if you looked at one of our asset classes, it would actually, or one of our buckets, it would actually have multiple asset classes in it. I think more constructive is maybe we range between a 0.35 to a 0.5 beta. But that doesn't negate the fact that at the end of the day, our biggest risk, like everybody else, is growth risk.
Growth risk. How's Hawaii doing? We were just talking about state and local government relief being part of this bill. I imagine the state's been hit very hard by lack of tourism.
Sure. I think we're not alone in other states that depend very heavily on tourism. It's been a tough time for all of us. I think we've made some strides in the virus, and I'm hoping that we can get things opened back up shortly. But for sure, I think that we're not alone in that it's been very tough for the local economy in Hawaii.
Elizabeth, I wonder what your take is on the upcoming earnings season. We're going to start to get the banks next week. There have been some pretty decent number of upside pre-announcements, but there have also been a decent number of layoff announcements. Is operating leverage, do you think, going to be the story of the quarter?
I'm not really sure. And pretty much everything I expected out of the equity markets this year has led me to some sort of surprise, and I'm certainly not going to trade on the upcoming announcements here. So we'll see what happens. But, I think there's a lot to go here in the equity story. We're at very early innings for what this all means, and there's a lot more to play out. And even with the upcoming election, I think we have to think about more about the medium term. A lot of this is just short-term signaling, and any data that we're getting right now is sort of meaningless, in my opinion.
Elizabeth, I don't know if you watch our air, but if you do, you've probably seen a parade of administration officials who, when they talk about potential aid or stimulus, also say, but we're not going to do it to bail out ailing pension funds in a lot of these states, because that's their own mismanagement. I'm just curious as to what you think when you hear that, given you run a pension fund.
I run the investment side of the pension fund. I don't run the benefits and administration side of the pension fund. And I wasn't, part of the pension fund for a long time when a number of decisions were made. So I cannot judge on that. I would say that investing in your pension fund right now is very critically important. We contribute a lot to the dollars paid out to retirees, and we want to make sure that we have the best people in the seats to be able to do that. But I also understand that governments are struggling a lot right now. I can think that paying out pension benefits is the #1 priority of the state, but I'm not managing the health department and the education department. There's deficits are big now, and they have to make some really tough choices, and I don't envy them that position.
At the outset of the interview, you'd mentioned you're changing your allocation a bit. You said you're getting a bit more conservative. Why are you doing that?
In certain cases where we can take some money off the table, we're peeling back a little bit. I think because I don't want to make a binary bet on the upcoming election. That didn't work out for people in Brexit. That didn't work out for people in 2016. I think there's a big risk of a contested election. I'm not so concerned about who wins the actual presidential election. I am very concerned about what happens in the equity markets. I get that some people think it's a short-term blip, and it probably is. The equity market is probably going to have some sort of short-term reaction to whoever the candidate is. And to be totally honest, I'm not sure if I'm really even that concerned about the presidential election. I'm more concerned about what happens in the local government elections. I think that's really key this time around. And that's very difficult to predict outcomes for the overall economy when you have to think about what's happening on all the little local levels and what that really means for the markets going forward.
Shepard Smith here. Thanks for watching CNBC on YouTube.